Now for today's real estate topic, we are going to discuss getting pre-approved and what that means. Now, I'm sure you've heard of a pre-approval. This is the most common way that you are able to buy a home in today's market. In any state that you're looking to buy in, you usually get a pre-approval. Let's begin, but before we begin today's episode, if you could please like and subscribe and also comment below on what other topics you would like me to discuss on this channel. Talk about something that's out of the norm. Let me know. I'm here for you. There is a difference between a pre-qualification and a pre-approval. With a pre-qualification, it's when you meet with your lender and they go over an estimation of what you're supposed to pay monthly based off the price of the home that you're looking to buy. So if you're looking to buy a $500,000 home, the pre-qualification will typically have like some general information about how much a $500,000 home will cost you with an estimated interest rate that you may pay, but it's all estimation. It doesn't get really serious yet just with the pre-qualification. Now, a pre-approval is very similar to a pre-qualification, but the biggest difference with a pre-approval is that you're submitting documents now to your lender to make it more official and actually verify how much you can afford on a property. Like before with the pre-qualification, if you wanted a $500,000 house, any lender will give you a pre-qual on how much that will cost you, but you may not be able to qualify for that amount. That's why the pre-approval is the more important document that you want. This is where you will begin to determine how much you can actually buy for a home and what your estimated payment will be. On top of submitting documents, you will need to have your credit ran with your lender to determine what your estimated payments will be monthly and what your interest rate will be, and it is different for everyone, and it is somewhat based off your credit score, not gonna lie to you. And here is the following documents that you will need for any type of home loan. Last 2 years of tax returns, whether you're W-2 or 1099. If you're 1099, that means you're self-employed. Recent bank statements from your bank showing how much money you have in your accounts, not because they're trying to take the money from you, but because they want to prove that you have income or money for your down payment. Okay? Verification of identity. This will include your driver's license, social security, which is very common when you're buying a property. This validates that you are the person that is applying for the home. Then, of course, as I mentioned, you run your credit with your lender to determine, where your interest rate will be at and how much your monthly payment will be on the property. You will have to do verification of your employment, which may require a letter of verification from your employer, your boss, verifying your hours at work and how much you're getting paid and that you are indeed working for a specific company. All of this stuff is very easy to obtain. It should take you no more than maybe 2 days to get all documents that you need to submit your pre-approval. Once you send these basic documents in, this is where you will wait to hear back on your pre-approval process. Now, your lender may need additional documents in the process of getting your pre-approval, but again, it's basic documents. Most of the documents that I just mentioned is all you need. Sometimes you may need a little bit more depending on the type of loan that you're getting. But let's say you submitted all your documentation and bam, you get your pre-approval like 24 hours later, which is very common. This is the best time to start shopping with your real estate agent, me, or any agent that you have. And now you can actually start looking at homes and writing offers on these properties. And this pre-approval letter is so important when you're sending your offer with your agent, because your seller, the home that you're trying to buy from, they're going to want proof that you can actually buy the home. Unless you have all cash and you can prove it just with your bank statements, you're going to have proof that you can buy the property you're trying to buy. And that's why that pre-approval is so essential when you are ready to submit offers. So I always say, right when you know you're ready to start looking for homes and putting offers in and getting one accepted, get your pre-approval right before you start that process, because it only takes you about 1 to 2 days to get your pre-approval documents submitted and get your pre-approval submitted back to you via email. It's a done deal. Once you get your pre-approval, it's not done. You're not fully finalized on your approval. You still have to go through a process when buying a property to get your final loan approval. So yes, you are pre-approved, but you don't have your final approval until you close escrow on the house that you're trying to buy. Escrow will be the neutral party that works for the buyer and seller. The escrow will be the one that holds your initial deposit when you get your offer accepted, which is part of your down payment. That way it doesn't go directly to the seller, or the seller will send, disclosures to the escrow company that are supposed to be sent to you. So you see how that escrow works? They're the neutral party. But once the escrow is closed, that's when your loan will be approved, finalized, and you get the keys to the property. So before the escrow closes, there's a couple of things that your lender will need to finalize your approval. And here are the following things that will be needed before completion. Getting your appraisal done on the property is required. Now, if you are getting financing, all lenders will always require an appraisal on the property. The appraisal is the actual value that the home is worth, the home that you're trying to buy. So for example, if you get the appraisal done once your offer is accepted and then it comes back under the $500,000 purchase price, let's say it comes in at $475,000. Yikes. We have a little issue. The issue is that because the appraisal value is less than $500,000 and it's at $475,000, either the seller is nice enough to lower the price of $500,000 to $475,000 to keep the deal going forward, or you as a buyer will have to come out an additional $25,000 to meet the appraisal difference of $500,000 to $475,000. $25,000 just for an appraisal difference if it comes in under value. That is crazy. And this is why you need your appraisal to come back at value to make sure that the loan can still go through and be approved for you so you can get the keys to your home and close escrow. You need to make sure that the title is clean, that there's no liens on the property from the seller that is trying to sell the property to you. This could be a tax lien that maybe the seller didn't pay their property taxes, or there's a government lien. None of that can show up on your title report. And it isn't your fault. It's the seller's fault if you're trying to buy the home, right? But again, if the title is not clean, then you cannot move forward with financing and getting your loan finalized. You have the pre-approval, you're in escrow, but you still got to have a clean title, appraisal come back at value to finalize your loan. The buyer could pay off liens for a seller, but why would you do that? And to be honest, a seller is obligated to pay for it in escrow unless the seller is asking the buyer and the buyer says yes. But if I'm your buyer agent, I say no, don't do that. What's wrong with you? Okay? It's crazy. And another thing that you will need to get your loan approved and finalized for closing, your home has to be livable. It cannot have any issues with foundation, structural issues that will cause issues with you living in the home. It's typically just a good foundation. You can move in as long as you can live in the home, that's good. So those would be a couple of the main things that you will need during escrow to get completed and to be done right before you can get your loan finalized. Your appraisal coming in at value, getting a clean title on the property, making sure the seller has no lien, and to have the home condition to be move-in ready or at least livable to meet the guidelines with your financing and your lender.